Welcome to How to Go Independent. Today I have an interview with Katie Brewer of Your Richest Life Financial Planning. Katie's on the show because she's got a really interesting background. She started at the same firm I did, Edward Jones, several years back. And much like I did, decided at some point that was not going to be the long-term answer for her career. But instead of making a move to a wirehouse and then directly to being independent, like happened to be my path, Katie kind of set out on a quest to find something that fit her and fit her well. And it took a couple stops along the way to get there. So I've come across her through a couple podcasts, the Radical Personal Finance podcast, the XYPN radio network, and she's been, ended up getting quite a few media quotes, as you'll hear her talk about in the conversation. So I think this is a great and different perspective from the other advisors that I've had on the show that tend to be affiliated with a broker-dealer, even if they have an RIA affiliation. So it's a great divergence from what we've covered so far, and I think you'll find it very enjoyable and educational. So without further ado, here's Katie Brewer. Well, today I'm talking to Katie Brewer of Your Richest Life Financial Planning, and I'm excited to talk to Katie because she's got a different perspective and experience than anyone we've had on so far, and really different than most people I've talked to. So we'll save the punchline till we get into the details. But Katie, thanks for joining me.
Hi, Sean. Thanks for having me on.
My pleasure. You and I have a similar background in terms of where we started at the original firm, but we've kind of taken different paths to a roughly, vaguely similar outcome. So why don't you give us a little sense of how you got in the business and a little bit of why you got in the business and your, I know you've got a long and winding road, but give me a sense of how you ended up where you are today.
Yeah. I guess the moment that I decided that I even wanted to have anything to do with numbers, finance, working with people, etc., was back in college when I was scared to death because I was a senior in college and I was about to graduate with a biology degree, which I joke is like the hardest degree that you can get and then not really ever use again. Maybe if I'd gone on to actually get the medical degree too, then I could say like, no, really, it's really like the hardest thing you could possibly get and then not use. And then,
there's no basket weaving in that.
No,
in that degree.
Unfortunately, there was no basket weaving classes that were elective. Like they were all pretty hard. But back then, and even as a senior in college, I was just scared to death of what am I going to do when I get out and have to like pay my own bills and I don't know what I'm doing. And, I feel like my parents didn't really teach me. So I took a personal finance class as an elective and I don't even think I got credit for it. I think I used all my electives already. But they offered it, and I was like, I'm just going to go ahead and take advantage of this class. And as I took it, I was just like, this is amazing. Like you get to play around with numbers, but you also get to help people reach goals. And at that point, I was like, I don't know how I'm going to do this with my, really hard biology degree that I'm about to graduate with. But somehow I want to stick my foot in the door and work in financial services.
Cool. And then when you started to, I guess when you graduated or shortly thereafter, when you found your first role in the industry, I know we all have different ways we end up where we start, but how did you end up at the first place?
Yeah, so I interviewed with a couple of places, and I really liked that the first place that I started offered kind of the ability to do your own thing, or at least they'd say that, but kind of be in a branch office where you didn't have to share it with like 100 other people. And be able to work with people in that community. So all of that really appealed to me. I really thought that it sounded like a good opportunity and one where I was like, well, if I dive in and this doesn't work, I always can go into doing lab work or become a teacher or something else that you do with a biology degree.
Right. Yeah, it sounds very similar to why I ended up at that same firm. It was day-to-day operationally nice to have your own ship, so to speak.
Right, exactly. Yeah.
And I think you've talked about this extensively in other places that we'll link to in the show notes, but I guess you found that the business development approach wasn't ideal for you. Is that a good summary? And why don't you talk a little bit about that?
Yeah, well, it was kind of funny because it had always worked for this firm, and I guess they feel like it still works for them. But it was effectively, for me, it was wandering around in a neighborhood that really was not a nice neighborhood anymore, like it used to be. And there were still some seniors there that had bought houses when it had been a nice neighborhood. But while I was there were actually drug deals going on across the street. We spotted prostitutes a couple of times.
Wow.
And it was to the point where, I'm going, this is kind of ridiculous. I'm like just wandering around neighborhoods asking people for their personal information in like a really awkward manner. Like, hi, I'm here at your doorstep to tell you that I'm opening an office right down the street. And, you should tell me about yourself. And they're just like, what? This is weird. Where did you come from? Where's your car? I'm calling the cops.
And if I'm not mistaken, you've talked about that your youthful appearance did not seem like an asset to you at the time, right?
Yeah. So back then, let me see, I was 23 or 24. And I've always looked probably 5 to 10 years younger than I am. And so people were like, is this a school project? Like, are you selling cookies? What are you doing here? And I'm like, no, I run a financial advising firm. And it was just funny because I got all kinds of comments. People are like, really? How old are you? When did you graduate from college? And this and that. So it was definitely an interesting experience, but I think it was also one that was like a good character building experience because it's like, well, if I survive that, I can do a lot of other things.
Yeah, agreed. I always think, I assume you at least got a client or two here and there out of that process, right?
Yeah, I got a few people that just didn't think that it was weird that I was knocking on their door and asking them for their personal financial information. So
that's kind of how I've always looked at that as, I'm pretty sure it's not the most efficient method, especially now. But after doing that it's hard to, I feel like it's a secret society if you can, give the handshake and, hey, I've been there and done that. And
exactly.
Yeah, nothing else seems too difficult to ask people if they want your help.
Right, exactly.
So once you realized that maybe wasn't the long-term solution, tell us a little bit about the path that you set off to find your ideal scenario and kind of what were you looking for and then what did you find and kind of that process. I've spent a lot of time. I think I've talked on this podcast about all the different people I've talked to because I'm interested in the different ways to do things in our business. Mm-hmm. And I've talked to a lot of people. You've kind of lived it. So I'm kind of interested to hear about that.
Yeah. Well, I think I realized even when I was at that first firm that I really wanted for people to essentially commit to something. I never felt like I was really good at sales. So if somebody's not on board with something, I'm probably not the best person to get them on board with it. But what I found is there are a lot of people out there that need help and are on board with getting help, are on board with actually paying for it. So I, essentially tried to find my way closer and closer to a model that felt comfortable for me, where I could be kind of working with the people that I wanted to be working with and do it in a way that I was actually comfortable working, where it wasn't just all like, oh, well, at the very end, they buy some product and I get paid buku dollars off of it. I don't think that's a wrong model, but I just didn't feel like it was right for me.
Gotcha. And what kind of what are some of the other, I would call that first firm more the traditional investment, commission-based at the time. They've got some different options, but for a long time, that's all they had. What other models in terms of the setup and, different types of firms did you spend time at before you kind of ended up where you are now?
Yeah. So right after the first firm, I went to another firm that they're insurance-based, but they actually have a model where it's pretty wide open architecture. Like you don't necessarily have to sell that company's products, which is funny because I thought that was the norm. And then I've seen some other life insurance companies and that's not the norm at all. So that was kind of a cool place to be. They always kind of started with financial planning. Just they really wanted to be working with business owners and their very complicated estate and business planning things because, life insurance fits really, really well into there. I was then 25 maybe. It still looked like I was 18. Didn't have any kind of roster of people to call. My dad wasn't in the business. Couldn't, just chime in on his stuff. So, it was something where, once again, I, sometimes bought lists and called people and landed a couple of appointments just off of randomly calling people being like, hey, I just wanted to offer you a free consultation. But at the end of the day, I couldn't quite get any traction off of that either. So I went to a bigger firm where they hired me on as an associate planner. So it was quite different. There I was an employee of the firm. I didn't have to bring in clients. And in fact, I think at one point I actually offered to bring in clients, and they were like, we're not sure that you are going to bring in the types of clients that we need. And I was like, okay. So that was
in what way in that example was that they weren't going to be kind of the high net worth type that they were looking for? Or what was the model, and what made them think that?
Yeah, so that was they kind of had a wide array of clients while I was there. They had mostly high net worth clients, but they had also taken on some where they kind of saw a potential in the future. But they kind of wanted to not be taking on more of those potential in the future and raise the minimums on everybody so that they were only working with higher net worth. I mean, you think about it, like the margins for them make sense to do that. Like it doesn't make sense for them to take on a whole bunch of clients that are paying a fourth or a fifth of what everybody else is paying, but still the same service model.
Sure. Yeah. In that case, at least to their credit, they had at least a little bit of a sense of who they were trying to work with.
Right.
And thinking that through. I think, as we know, a lot of advisors or firms don't figure that out till they're way down the line.
Yeah, exactly. I mean, so I do admire them for having kind of the business vision there. I kind of tried to push for like, hey, we don't necessarily have to have the same model for these clients. But, if something's working, I wouldn't expect a firm to go change all of it. So, I think I got a little discontented and said, okay, well, I'm just going to go try to do my own thing again. So I did that a few times. I took a little break from financial planning at one point to go do marketing for a unified managed account platform, which was actually a lot of fun. But then, said at the end of the day, I miss actually working with people. Like I miss, when they say, here's something that I'm really thinking about or that I'm really worried about, and being able to help them kind of think about it outside of the box, or here's how you can think about it and take a little bit of the emotion out of it. Or even here's how you can use your emotion to drive you to what your goal actually is.
Yeah, it's hard to for people that don't do that or don't get so jazzed up about it. It's hard to explain it when you just want to say you could do this or this and ask the questions and dive in. And I think anybody that's been in this business a while and enjoys it, it's not the same if you're not face to face with, or at least phone to phone or some sort of device to device.
Yep.
with
your clients.
With real people, yeah.
So I will say that the firm that we started at, one of the sayings that I thought was so hokey at the time, but I still, I should print it out and put it in a frame. It said, you've got 2 ears and 1 mouth for a reason.
Yep, exactly.
And I thought, God, that's just so hokey. But the longer and longer I was in the industry, the more I was like, man, that cheesy saying was so true. Like, you just have to ask the really good questions.
Yep. And I doubt they invented that saying, but because I've heard that in other sales contexts. But it is true. It's very useful.
Right.
Cool. So I imagine along the way you learned a lot about what you didn't want to do, and then tell me about how did you decide? All right, enough of this working with other people or for other people. I see a way to create kind of my richest life, if you will.
Yeah, well, so I've always been somebody who likes to come up with ideas and then, kind of give them off to other people for implementation, which is probably not great. But I kept talking about this enough to where a friend of mine finally kind of gave me a little kick in the butt and said, you just keep talking about this. Like, please quit talking about it and just give it a try. And I'm like, well, here's my 1,000 excuses of why it's not going to work. And she's just like, no, really, just give it a try, please. Like, give it a best effort. Let's see how it works out. So I am very thankful to that person for giving me a little bit of a kick in the butt to point out that, I was sitting here dreaming about my dream, but wouldn't actually take action on it, and convinced me to actually quit complaining about it and go take some action on it.
That's a good friend to have, for sure.
It is.
And that was how long ago now that you dove in?
Yeah, so that was about 2 years ago.
Okay.
Yeah.
And, I know there's a lot of resources out there that I'll probably mention and pull out in terms of the ones that I'm familiar with. But How did you go about that, setting up your own practice, and how did you decide kind of what platforms to use or not use? And tell us a little bit about that process.
Yeah, so I guess right about the time that I started having this debate with myself about, do I start my own? Do I not? Do I go back to working for somebody else? I had a conversation with Michael Kitz's because he had actually referred me to the firm that I left right before I started my own firm. And, I just wanted to be polite and call him up and be like, hey, I burned any of your bridges. I apologize. Sorry about that. And he was just kind of asking, what are you doing next? And kind of told him, and he said, well, I mean, if there were a network where they would kind of take some of the decisions off of your plate and give you a little bit more resources, like, would you consider that? And I was like, yeah, that sounds wonderful. I don't know what you're talking about because I'm pretty sure I've researched everything. And he was like, well, I'm thinking about launching that. And I was like, all right, count me in. Don't know what you're doing. Don't know anything about how much it's going to cost or what you're even going to offer. And I was like, but count me in, because if it means that I can, essentially be an entrepreneur when I have a very not entrepreneurial risk tolerance, then that would be great for me. That was
interesting.
That's XY Planning Network.
Right. Just to back up 1 second, I'm curious, because I don't remember this part of your story. How did you link up with Michael in the first place to get that referral to the that firm you worked for?
It's a small industry, and when you've been in it for a really long time, you tend to just kind of see everybody around at conferences and introduce yourself around. And I had gotten to know Michael, I think probably through conferences, and he's always been a really big proponent of the Financial Planning Association. And I've been in the Financial Planning Association for a while and pretty involved here in the Dallas area. So
cool.
Just that way.
Awesome. Yeah, I know he's obviously built not just the business we're going to talk about, but several others. He's quite the entrepreneur. But I think, like you said about yourself, not necessarily someone who would have thought of themselves that way, 10 or 15 years ago. So when you said you're not necessarily an entrepreneurial type person, that's great to hear. Tell me a little bit about that from your kind of if you had some sort of risk aversion, because that's good for people to hear that maybe think, well, going independent or starting your own thing is some huge undertaking. How did you do it? Or how did you get over that other than your friend convincing you?
Yeah, well,
tell me a little bit about that process.
This is a little bit chicken, but I kind of let her go start her own firm from scratch.
Nice.
And watched how that was going, and, provided some moral support and some, you're not charging nearly enough type of support. But I think it really helped to see somebody else jump off the cliff and actually swim and not, go missing in the waters below. And just being able to talk to people around the Dallas-Fort Worth area, people that I've known for a long time through the Financial Planning Association, being able to call them up and just being like, hey, I'm thinking about doing this. Can I come take up a little bit of your time and talk to you about it? And you can tell me, what your experience was in starting up your own RIA. And I had a couple of people do that. And it just kind of made me feel like, I think I blow this up in my head a lot more than it needs to be. And especially if you're in broker-dealer world, they make compliance sound really, really, really hard because they don't want you out there experimenting with stuff. So
sure.
I think to some point, sometimes, it's part of the industry is making stuff look like it's in this black box, because that's part of the way that you kind of get held to whatever company it is that you're at.
Sure. If you're an employee, there's a clear conflict of interest. It's not like they're not your advocate to help you make more money if that would include them making less. That's not how it works.
Exactly. So I think part of that was kind of hanging over me, that I was just like, oh my gosh, it's too hard because I don't know what I'm doing. And if I don't know what I'm doing, I can't do it perfect.
Right.
And, finally I was like, I could either do it perfect in 20 years, or I could just try to do it at all right now. So finally decided just to jump in and give it a try.
Awesome. So as XYPN got going, I think you were a charter member, right? Is that how it worked?
Yeah. Back in my day, just spit my dentures out real quick. But yeah, back in my day, there was only 20 of us, I think, that kind of started with the inaugural group.
Awesome. So tell me a little bit about how that played into your kind of getting going, and then I know there's a lot of tools and resources and encouragement, community, all that good stuff, but they're not clients being handed to you on a silver platter, I know. So kind of tell me a little bit about, where they were helpful and then what, was still left to you in terms of, getting something up and running and viable, and sort of how that's gone.
Yeah, well, I mean, from the beginning, I think it was helpful that I had been in the industry for a while, and then I kind of knew like what my role is versus what like a network's role is, because I knew at the end of the day,
Right.
like they could provide compliance guidance, but if I got audited and they said, what is all this junk? Because it's still my firm. So I still have to know what's going on. I still, I can accept help from people, but at the end of the day, it's still my responsibility. But, there was some compliance help in kind of getting the initial documents going. So the ADV, kind of how to navigate that goofy FINRA website. Sorry to regulators that are hearing this. The thing is crazy. So doing that, kind of getting a business plan in place, setting expectations, and then kind of focusing on like what I actually needed to be doing. So part of the sales training that I had received before was really helpful, because while there are a million details, I kind of like jotted those down and said, I'm going to get around to these when I can. But at the end of the day, like if I'm not out actually talking to people and explaining my business model and creating a good website and creating good content, like I'm not actually going to get anybody to do business with. So it doesn't matter if I have like a shiny, perfect business if I don't have anybody in the business that's actually working with me.
Yep. Amen. And what did you decide? I know one of XYPN's big pushes, and I think that's should be for the industry in general, is kind of finding a definable niche. But we haven't really talked much about kind of what XYPN tends to focus on. Why don't you tell us a little bit about that and how that plays into who you work with?
Yeah. So XYPN, kind of their requirement is that you work with people in a fee-only capacity, and that you have a business model in some aspect where you can work with Gen X and Gen Y. So, I mean, roughly that's clients under 50. Millennials are up to about age 35, and then Gen X is about age 35 to like maybe mid 50s. So, we have to at least offer out a like monthly payment or kind of like a retainer type of payment. But it's also pretty flexible in that you can do that and AUM. You can do that instead of AUM. You can do project type clients if you want, which is good, because I felt like probably the first year to maybe even year and a half was just experimenting with
right.
who came, who turned out well, who didn't turn out well, like who I liked working with, who liked working with me. And I'm still tweaking that. So I think people seem to think that I might have that figured out, but I'm like, no, we still every probably 3 to 6 months sit down and figure out if, the marketing efforts are in line with who's actually, a good client at the end.
Gotcha. So basically, someone that's not a baby boomer and have a way to get paid on a flat consulting fee basis versus an asset-based arrangement.
Right. And like I said, it's pretty flexible. So, I mean, like if I wanted to do one or the other, I could. But it's just a way to essentially, if you've got a 30-year-old that shows up and says, I make $400,000 and I have an insane amount of student loans, and, my 401k right now has $20,000 in it because I just started saving in it. Like normally in the wealth management industry, they'd be like, thanks, kiddo. Here, let me give you a 30-minute free consultation and a book about how to improve your future and come back whenever you have more money.
A pat on the head for doing good and keep it up, and we'll talk to you in
exactly.
20 years or something.
Exactly. So the whole point of having this kind of alternative model is being able to actually work with those people, before they accumulate a bunch and before they're enticing to the rest of the financial planning and wealth management industry.
And from I haven't dove into this. I probably need to do an episode on it, but can you give your explanation of kind of the RIA world versus what I would call more the hybrid world, either a hybrid, working for a big firm or hybrid working associated with an independent broker-dealer. Can I give a sense of the differences and how XYPN, kind of tilts and how your practice is set up? Because I think that's useful for people that aren't familiar with those distinctions.
Yeah. So, whenever you're with an independent broker-dealer, you usually still have somebody running compliance for you and running compliance oversight for you. So, you don't usually still have to take that on unless you decide to. So there are plenty of independent broker-dealers where they'll let you go get your Series 24 and they'll let you, supervise yourself and others, some of them. I've been hearing stories lately about how they're cutting back on that. But you don't have like the buck stops here on your compliance. You still have somebody that's actually like overseeing you. And then in the independent BD world, you might be able to operate as an RIA, but you also might be able to operate as going through the broker-dealer. So, it probably comes down to choice of products and choice of compensation. So, for example, if somebody was leaving somewhere and they had a whole bunch of like trail revenue and they didn't want to get rid of their trail revenue, it probably would not make all that much sense for them to become a fee-only RIA.
And when you say trail revenue, can you elaborate on what you mean by that?
Yeah. So if they had sold annuities or if they had sold life insurance or if they had sold products where they were essentially still getting paid on the back end for it without really having to do anything.
Right. Anything brokerage, mutual funds in a brokerage account, annuities, like you said, but not necessarily advisory, asset-based fee.
Yeah, maybe so. Mutual funds are a lot easier, I feel like, to, transfer them into an advisory type account and just switch the way that you're paid on them. But there are other people that come from like proprietary models and stuff like that. Sometimes they never leave because they're sitting there looking at revenue that just shows up every single month, and they're like, why would I give that up?
There's two. They don't see the path to the advisory or RIA only model.
Right.
Yeah, agreed.
So on the RIA side, there's pluses and minuses of kind of being your own compliance person. So the minuses are you have to do your own ADV updates every year. So about like March 15th or whenever, it was a couple weeks away from that deadline, I'm kind of raising my fist up at the universe and going, why am I my own RIA? And it's not because it's all that hard. It's just because I'm sitting there trying to figure out what I want for that to look like, and I don't want.
Yeah, another thing to take care of, and you don't get a gold star or any glory for getting it done.
Exactly. There's no pat on the head for getting that done. It's just something that you have to do. Right. But on the flip side, I don't have to go ask my broker-dealer permission to contribute to an article, which I found is really, really beneficial for me, just because once you establish some trust with writers, like once they figure out they can get a hold of you easily, you've got something good to contribute, you can actually water it down into normal people's language instead of giving them a bunch of technical junk. Once you've established that, I have quite a few freelance writers and reporters and stuff that will, just say like, hey, I'm working on this piece. Can you contribute? I need it back within this time period. I do it. I don't talk about anything product specific. I don't sit there and make any stupid promises.
Right.
But then, I have to archive that and I have to keep it in case anybody ever asks for it. But I don't have to sit there and wait for a week for a broker-dealer to get back to me and say, well, we didn't like this and we did like this, because writers aren't willing to sit around and wait for that normally. They've got a deadline and you can either help or you can't. So if you need them to get it back to you and take a week and a half for your broker-dealer to give it their blessing of approval, a lot of times they won't wait for it.
Agreed. Yeah, that's one, even being hybrid, where if you can couch something in the RIA side of things has been helpful for us, but it could still be very frustrating. I know that's a big frustration. You hear, when I listen to the XYPN podcast, you hear the host Alan Moore talk about that. He's never lived in that world, so he doesn't quite get, it's just unfortunately the way it is. I'm not sure that'll be that way forever because we'll see how these regulatory regimes go over time. But yeah, that's very helpful. And then can you define, your understanding or what you would say the definition of fee only? Because that's the one that I'm not sure everyone has a good handle on.
Yeah. So I'm a member of NAPFA, and they have a pretty extensive, description and whatnot of what the standards are to be a member of NAPFA. But it's essentially none of your revenue comes from commissions or commissionable type things. So it is funny because it's even fee only. Sometimes I feel like people might even misunderstand that because they might be like, okay, so it means I always have to pay out of pocket. And it kind of does, but it could come from an account as an assets under management charge. It could come as a retainer. It could come as an hourly fee that you're charging. So, I mean, even within being fee only, there are different ways to get compensated. They just can't come from 12B1 trail revenue. Can't come from life insurance trails. We can't come from selling life insurance. So I let my insurance license go. It was kind of a sad day. I was like, bye. At least I learned all of this stuff about insurance so I can oversee the process. But at this point, I recommend what it is that I think that clients need, and then I use a third-party insurance firm to put that in place, but I don't get paid anything from it.
Right. It's great to be objective, but sometimes, you go, well, it's the right thing for the client, but that's the model that kind of in play there, so that's the way it is.
Right,
and
yeah.
As long as your clients are taken care of, then that's great.
Yeah, I joke around with my clients. I'm like, I would be making so much more money if I was a fee and commission advisor. And I'm like, but I decided not to do that, and that's probably why we're working together.
Yeah, I always chuckle at, when recommending term life insurance. The good thing about it, it's so cheap that it doesn't matter if I don't get paid. That's the whole point.
Right, you're like, I'm only giving up like $50.
Yeah, I think that's one reason there's the conflicts for people that they like insurance, and lo and behold, they seem to like permanent stuff a lot. Well, there's they can't give that up if that's their business model.
Yeah, I know, it's kind of shocking.
One of the way
our next thing that we publish is like, how much more do people make out of recommending certain products?
It's interesting. Not that that's the only factor, but it certainly can be an important one.
Right.
Yeah, the fee only definition, I always understood it or simplified to say, follow the money. So if the money's coming from a product provider to me or you as an advisor, then that's not fee only. So if it's an asset-based fee, it's going from, and you're in a fee-only capacity, it's going from your account to my account, or through some custodian, obviously. But there's no question of who's paying who. The client is paying us directly, one way or another.
Right.
Obviously, like you said, within directly, that can be defined a number of ways. And that's where I think, at least I find personally, I love the idea and concept of being fee-only. Except that's a terrible, terrible term for marketing. It's fee only.
Yeah.
It's only fees.
It's only fees. Don't you love fees?
Great.
Everybody loves fees. Why wouldn't you love fees?
Yeah. But, coming from a world where I didn't know what that existed like you did and being in it for long enough, it's hard to see the road. There's a path there. It's just it'd take a while, and I haven't gotten around to it like a lot of us don't.
Right. Well, I figured if I was going to start from scratch, then I might as well do it the way that I wanted to set it up.
Yeah, now you're just showing off. That's okay.
So, I often say, I don't know what the heck I was thinking. Then I was like, look, I just have 0 clients, and I'll just start this completely from scratch, knowing that a lot of times people take their sweet, sweet time to finally, start doing financial plans.
Yep.
But at the same time, I'm like, well, I knew it was going to be a slow growth, but then I knew at the end of it that it was going to look exactly what I wanted it to look like.
Great. And would you say, how far along that path are you now, after 2 years or so?
So I did hit profitability earlier this year, which was like, woohoo.
Congrats.
And now I'm kind of working on.
And how do you define profitability? What's the methodology to get to your profit or loss?
Yeah. So that would be can you actually pay your bills to keep your firm operating and do the marketing that you want to do as well?
Gotcha. So
that was good because, if you start up any business, you kind of have to have some money up front that you put into it. So I hit profitability and actually paid back the loan to the Bank of Brewer because I essentially saved up money and then took it out and then paid it back.
Awesome.
So all of that is good. And then, anytime that you're in financial services, it kind of, at some point, starts picking up more and more traction, which is good. So I think I'm at the point where, I've got some people that are referring other people to me. I've got, a really good relationship with some writers and some reporters. So it's at the point where I can be a little bit more selective. So I'm trying to kind of tweak marketing a little bit just to make sure that I'm attracting the kind of people that I want to be working with long term.
Right. That makes a lot of sense because I think that's one of the great benefits of starting from scratch from a business standpoint, but not from a knowledge and experience. Like you said, you're able to craft that just how you want it versus like many of us do, sort of building something and then, it's a work in progress. It wasn't a tear down. You're definitely remodeling the business versus building it from the ground up.
Yeah.
If someone were in this kind of where you or I were, I don't know, say 8 to 10 years ago, I'll loosely define that, as knowing kind of what they're doing in terms of feeling comfortable with clients. Maybe they have a core client base. Just for illustrative purposes, let's assume they're a big name firm and they've got, some assets under management because that's, a large function of how you stick around there. Let's say they've got some clients, maybe it's 15 to 25 million in assets, and they realize they don't want to be there forever. How would you advise someone to go about looking at the different options available to them?
Yeah, so if I were them, and I'm going to preface this by saying when I was at the first firm that I was at, and I've stayed in touch with some people, I feel like a lot of times people that left there only left because somebody else showed up at their doorstep and said, you can make a lot more money doing this other thing. And, maybe it worked out for them or maybe not, but I feel like, maybe if you're going to make that big of a change that you should do a little bit more research into all of the different options that are out there.
Agreed.
And not just whoever calls you up and says like, hey, we've got this shiny way to do business over here.
Yeah. And I would say that, the caveat I'm thinking of is this person they are mindful of trying to build something for the long term. And so, that's great advice because I'm talking to you, I'm thinking of you, I'm thinking of myself, but and again, it's not that easy to assume that everyone's going to be there. But let's think someone's trying to build something that ideally they only have to make one move for a very long time, or maybe it's an evolution, but this is going to be a foundational step.
Right. Yeah. So, in doing that, maybe looking at where your business is right now, as far as types of clients, products that you have in your business, being able to kind of run a couple different scenarios, does it make sense for me to go independent or does it make sense for me to, go straight to RIA? And figuring out what that means to you. Or does it make sense for you to take a humongous bonus off of another firm to stay there for 7 years? Because I've seen that quite a bit too. But any of those scenarios could make sense. It just, as financial planners, it's funny how much we'll tell other people what to do, but then we don't really want to sit there and evaluate our own situation for very long.
No, I agree. I think that's very true. And I think your previous kind of thought of, talking to other, like you did, talking to other people that have been there and done something different. I think there's definitely a value in finding someone who's doing what you consider doing. And then I think the missing part sometimes is survivorship bias, right? So go find some people who started where we did, like you and I started at the same firm. If someone was going to go work for that firm, if they could find us, which it's not that hard if you know where to look, get the other side of the story. Hey, why did you leave? I don't have anything terrible to say about that place. It just wasn't going to be the lifetime employment place for me.
Right. Yep.
Same thing with the wirehouse I was at. It served a purpose, but it was temporary.
Yeah. And I know it's hard whenever you're at a place where they don't look kindly upon you leaving with what they consider their clients.
Yeah.
So, I mean, if you're going to reach out to people, just explain to them that you're in a situation where you need to talk to them confidentially. Like, are they okay with that?
Yes.
And there are a lot of
Very
people
good.
that are fine with that. I've had people, just recently, I had somebody reach out to me that was kind of telling me what's going on and what they're thinking about doing. And I know that person is in a situation where they don't really need anybody else knowing about what it is that they're thinking about doing. So
right, and luckily, those of us that have gone through that, I mean, 99% of the time, I would hope, maybe not quite that high, but we get that. So we respect the privacy and confidentiality. You want to be smart about who you talk to, but I'd say most people understand that they're not going to do something stupid, but it doesn't hurt to mention it every time you speak with someone.
Right, exactly. Just to make sure that they know. Because, because if they've never been in that situation, they might not even think, oh, like it might really, harm this person's business and their client relationships if they find out by somebody else that this person's thinking about leaving.
Agreed. Yeah, one thing one of my ideas for this podcast was there's a lot of information out there, but most of it is, journalists, because those of us that have practices, people are actually working on that. They're not messing around with building a podcast. And Katie, I appreciate your time, talking about this, because this doesn't do anything spectacular for your day-to-day business. So I appreciate the kind of the giving back nature of what, not just here, but you've done this on other podcasts. I know you were on the Radical Personal Finance podcast a while back. You've been on XYPN Radio. Anywhere else, if people want to hear your story over and over, they can go find you.
Over and over. I've been on Stacking Benjamins a few times, but, I don't think that they really got into depth of what the background was. But The host of that show was at Ameriprise previously in several different roles. So it's always interesting to get his perspective as well of, he's in a totally different place. He doesn't have a practice anymore. He has a podcast.
And that podcast is more consumer facing, generally speaking?
Yes, and that podcast is more consumer facing.
Cool. Now I know that you get quite a few requests for time and expertise, and I think you've been wise to convert that into a potential consulting opportunity. How can people find you if they want to, and can you get a sense of what you usually charge for your time in that situation?
Yeah, I just made the decision at one point that I was going to essentially charge advisors the exact same thing that I charge my clients if I worked with them on an hourly basis, just because there are a lot of people that, just want to chat. So usually if I know them and have known them for many years, I'll go in for a lunch and that's it. But if I accepted lunches from all of the people out there that are thinking about starting their own practice, I would be 30 pounds heavier and I would be spending all my time doing it. So I set up an account on something called Clarity. So it's clarity.fm/Katie Brewer-CFP. And it's something where somebody can essentially go there, they can book an appointment, and then that allows you to kind of do everything at the same time. Like you can request the appointment, put in there what you want to talk about, put in your payment method. It makes it really easy on anybody who wants to talk to somebody for like coaching purposes. And then it makes it really easy on me because we're not spending like several hours going back and forth just talking about when it is that we could talk and how it would actually work if I was, helping somebody kind of think through, like starting their own practice or stuff like that. So that's something where it's not like it's a big revenue maker for me, but it does kind of separate out the people who want advice but don't want to have to pay anything for it from people who actually value it.
Right. No, that's great. That's a great idea. And, I think if you can find someone or someone know someone, kind of connect the dots. Because, we all want to help someone if it's someone we know. But, again, we all have limited time. And we didn't touch on it. Usually I do. But why don't you just have all your huge staff do all your work for you while you're at these lunches?
Yeah.
Why don't you just do that?
So I have a virtual assistant who I adore and love. So she does actually organize some stuff for me. She can help with appointments and follow up and stuff like that. But in part of the whole starting your own firm, it's kind of a dance between keeping your overhead low while your revenue grows. So there are a lot of things where, like, I use an executive office through a company called Regis. I don't have an actual physical office unless I go book it. So that's something that, at first I was like, oh my God, people are never going to do business with me if they can't show up and see my, office with the fountain in it or whatever. And nobody cares. Like, I've had a few people that are like, so do you have an office there or do you not? And I'm like, I do. I have an office that I can book ahead of time. And they're like, oh, okay, that's interesting. And then that's it. Like, if that's something where they decided that that's a deal breaker, then it's a good thing that we got it out of the way beforehand, because they might have very different expectations of what they're looking for. So, yeah.
Right. Yeah, I think that's a great fit with, it helps from attracting the right people. It obviously, I think if you skew younger, like your clients might in general, then hopefully it's less of an issue. But if it is, oh well, there's somebody else that it's not going to matter.
Yeah, and I mean, like, I do tell people in the area that I'm in Dallas, Fort Worth, if they want to meet, one time, two times, a couple of times in person, I'm okay with that. I just need to actually, like, plan ahead. They can't just show up and be like, I'm having a financial planning emergency, which shouldn't exist, by the way, but somehow it does. If they're doing that, then they need to actually, like, call me, or, we could set up a time to talk.
Cool. Yeah, like I said, I think I love talking about the different decisions people make about staffing and real estate and that sort of thing. But I don't want to take up the rest of your day, because I could shoot the breeze about that as long as people will sit here. But
yeah, well, I actually did an article for Money at some point in time, so we could put that link up. But it was essentially about what it's like to work as a virtual financial planner. And that did go through kind of like how I communicate with clients and what kind of tools that I use. And I'll give you a very quick rundown, like my favorite technology tools. Schedule Once is one of them. Similar also to Calendly and Time Trade. If you're going to check one out, just look at all three of them. It essentially lets me put my calendar as a link. So people just go onto my website and it says, do you want to talk to Katie? Click here. And they click there and it shows them times in their time zone. So they say, I'm in this time zone. So it calculates it out for them. It shows them available times. They put in some information that I require beforehand. And then it goes to me for approval. And I actually have the app on my cell phone, so I can approve it right then at that moment. It goes on my calendar. They get a confirmation and a link to put it on their calendar. And oh my gosh, I swear that saves me so much time. So
yeah, I think there are people that still today that are paying an assistant to do that.
Right. Yeah, do the back and forth and which time works for you, and we'll put it on there. So, I mean, I do work with younger people. I find sometimes that a 65-year-old does not like my scheduling app, but a 45-year-old thinks it's awesome and efficient and great. So those are things where just know your audience. And then financial planning side, I use a tool called Right Capital. Financial planning software, but also does aggregation, has a vault, has a client portal and all that stuff. I could do a whole podcast on financial planning software, but I tested a lot of them. And, there are so many that are very, very retirement heavy that just didn't make sense for like the story that I'm trying to tell my client, which is, you make really good money. Let's figure out how to put it to its best use. And then I show them something that's like, you're not on track for retirement. It's like, well, duh, of course they're not on track for retirement. We've got like 5 other things that we're trying to take care of before that. So I feel like Right Capital is one where it's really easy to use. Doesn't take me that long to actually build a plan. The graphics look good. The linking is good. They use Yodlee. And I mean, they're very new to the scene. So, I mean, it's something where I'm willing to kind of take the risk on what the deliverable looks like to kind of get an easier to use financial planning tool that I can use.
Yeah, that makes sense to me. I think that's the improvements that I could see definitely could be on the ease of use, not just for the end client, but for us to get the data and get great output, but in a relatively user-friendly manner. That's a big issue.
Yep. I mean, so those are my main tools: Regis, Schedule Once, Right Capital, a computer that's really good. I use Google Voice still. Every couple months I go, the sound quality on this, I'm not sure if it's excellent, but then I'm like, I pay $0 for Google Voice. That is super flexible. It lets me record calls and So I haven't quite moved off of that one yet.
No, I'm with you. That's one of my favorites. I can't get over what a great tool that is.
Right.
I don't know too many people that use it. So glad to hear there's someone else that appreciates it like I do.
Yep.
Well, cool. Is there anything else you want to add, Katie? I really appreciate the time, and I think this will be very useful for people that are looking at, learning about the different options out there for setting up their own practice. Anything else you'd want to mention that we didn't touch on?
No, I just feel like if somebody is thinking about going independent, don't shut yourself down automatically. Don't sit there and wallow in the, oh my gosh, this is going to be really hard, because it probably will be hard for a little while. But, if you can kind of envision what you actually want your relationship with your clients to look like, what you want your day-to-day to look like, what you want the future of your practice to look like, all of those benefits probably far outweigh the being uncomfortable for 6 months while you try to make the transition.
Yeah, I'm with you. I think for a lot of us building the client base, man, that's not easy. And so I felt when I've made the change and talking to other people, man, if you can build the business part, moving it is it's short-term pain for long-term gain. But
right.
Yeah, I think you're right.
Yep.
Starting the business part, not nearly as intimidating as we sometimes think it is.
Exactly.
Good deal. Well, thanks again, Katie, and I'll catch up with you sometime soon.
All right. Thanks, Sean.
And there you have it. Hope you enjoyed that conversation with Katie Brewer. A wealth of knowledge from her background in the industry, and especially setting up her own practice here in the last few years. If you have any thoughts or comments about this episode or any prior episodes, please email me at sean@indfa.com. And like you heard Katie say, if you're interested in learning more about her path and what wisdom she might be able to share that applies to you, she's willing and able to do that for a modest consulting fee. I'm happy to take any questions or calls or emails and not charge for it at this point. So if you have any specifics you'd like to discuss, don't hesitate to reach out. That's one reason I started this podcast. I enjoy those kinds of conversations. If I can help people either come to a decision on their own or find other resources, I'm more than happy to do that. So thanks for listening, and we'll see you next time.